Good afternoon. Ready for the case?
Yes, ma'am.
Great. So I need somebody's help to just go through the idea behind the case and what is it asking us to delve into. Who would volunteer? Simran, would you like to?
So, ma'am, we are going to talk about a company called Progressive, which was founded in Cleveland, Ohio in 1937. And I think the main gist of this case study is coming from Progressive's culture to innovate.
Is there some particular innovation which they are talking about?
They're talking about autograph, as in pay-as-you-go model.
Okay.
So, in which you only pay according to your actual driving behavior, not as per the age of the vehicle,
Okay.
which is a very new concept.
Okay, I think Simran has given a nice framework of how this progressive company has been and how it is evolving. So the case that we talked about today in the class was Progressive. It's an insurance company from US. It's not in India. Still, we have selected this case study because this company has come out with number of innovations which are very new to the industry. She mentioned these important points: pricing, sophisticated pricing, series of innovations. In that series, the last one which they have brought is Pay As You Go, which is the title of the case. The insurance industry is a very competitive industry as well as very, very dynamic in nature. With every passing day, the risk profiles, the risk landscape keeps changing. So students need to be thinking out of box. So this case study also offers that kind of, discussion scope which students can avail and look at the out-of-box thinking side. So as we go into this, the first thing, let's discuss about the pricing, sophisticated pricing. What do you mean by sophisticated pricing? And do you think pricing is important in insurance industry?
Yes, ma'am.
Is that so? Yeah, Hanuman, please go ahead.
Yes, ma'am. Pricing is the key for an insurance industry, and this is where I think Progressive have differentiated themselves.
First and foremost thing with ma'am or with any other professor at NIA is they allow you to think. They allow you to think. They want you to come up with your opinion.
And also, they have not restricted themselves to see the fact that, let's say, if they have violations, then we cannot price them or the risk is bad. Based on the kind of violations also, what are the kind of violations?
Okay.
They have even gone to that extent and used that data to price that risk either above the market rate or below the market rate.
How did it help? How these things helped? You are saying their pricing is based on more number of parameters than the conventional insurers we are using. Is that right? This case study is like a very new experience. So they come out of, they bring very new ideas.
By doing this, what they were able to achieve is, while the other players simply rejected that risk, they could offer coverage even to those customers, thereby increasing their customer base.
Okay.
So that is where it was stated that they tapped into that market, 20% market of high risk territory.
Right. So it enabled them to accurately predict the risk, charge the risk or price the risk and serve that set of customers. That set of customers who will have more variations or more variability. Is there a term used for them? Non-standard risk. So what I do is, whatever they tell me, rather than discarding, I have my responsibility is to jot it down, present it before them, and many a times they see that strategy is not about one or two standalone actions or ideas or decisions. It's the totality which is very important. Everything has to sync together. There should be synergy in the decisions which are being taken, and it helps me in not missing out important points. Can you give example of non-standard risks? Am I a non-standard risk?
In terms of motor insurance, we can say a non-standard risk will be a driver who is frequently getting challans, and now in India
Traffic violations.
Life challans.
Great. So the one who commits more traffic rule breaking or is more on road for a longer time, driving longer duration, driving heavy commercial vehicles. Is that right? What else?
Can this be the non-standard risk where the driver is driving in the vehicle in a mountainous area?
Ma'am, the other things would be the medical conditions that the driver might be facing.
A driver who is into this business only, we can categorize him also non-standard because he is a part of the system and geographically he is moving around the world. So we can say that he is a non-standard risk.
My individual approach is never to say this is right or this is wrong, because in a practical world, the decisions, how we execute execute is more important rather than the decision itself. So I encourage them to take a stand, to take a decision, to make up their mind. So my question is, why do you think these set of customers were not very much welcomed by conventional insurers?
Yeah, ma'am. I think the main issue was the risk involved in it. The new customer brings new risk. Since he is not very much versed with the driving pattern and how he should approach it, the different kind of risk involved just ignores the companies. Like, it enables the companies not to put in the stakes in these kinds of risk. But what our company has done is, like, pay as you go, an autograph will help to analyze the driving pattern. If suppose the driver is very new, it is the first year of his driving experience and he is driving a sports utility vehicle, the risk is involved is very, very high. But the pay as you go model, which is followed by the autograph, will help to track down the different kind of aspects and his driving behavior, which will help to quote the price very well, and hence the risk can be catered, which was not done by the earlier insurance company.
As students of insurance, we are taught the conventional ways, but case studies like this help you to delve into the subject matter at a deeper level. This case was specifically about motor insurance, and talking about motor insurance, how to price a particular risk is taught to us in our basic classes. But when we study a case study like this, it helps us to broaden our horizon and find out ways in which you can make strategies that will ultimately help the policyholder as well as the company.
Why Progressive could do it and not the other companies is the way they looked at data. Simple, in a single word, it is data, and also the number of variables. While the other insurance companies were looking at from a standpoint or view that only a single aspect, Progressive were able to look at multiple factors. So when you consider multiple factors and take them into consideration is when you get a holistic view of the risk and you can take an informed decision. And that is where Progressive progressed.
So am I correct in inferring that Progressive could do well in spite of doing business with risky set of customers because of these abilities which they built up over a period of time? Is that right?
Yes, ma'am.
Yeah. My next question is, do you think it's a very patented thing? Can others copy this thing? Yeah? Okay, so there is a challenge. So once you start making profit, others will also look at it, that market segment. My effort is that their thinking should not stop. So I never kind of counter or I stop or I convey that the student is wrong. So that's where we keep on exploring. I never conclude. That's where the students also tell me that what is the conclusion of the discussion. There cannot be a conclusion. The story is ever evolving. That's what is business, that's what is strategy all about. Now my next question is this, that when the others started looking at this category of customer and started entering into this set of customers, what do you think they would have done in the market?
The entire discussion started by how Progressive is not exactly conventional. So what are they doing to not be conventional, i.e. what is giving them a competitive edge is, I think, what I brought into the picture. And my major focus in the entire discussion was on data, because as we are moving towards a digital world, person with data is the king. First, I'll start with what is Progressive doing. They already have the data that they need. They already have the customer base. So they went into innovation. They went into customer servicing to retain their customers. But the problem, I think, started when they also started playing with the prices, the competitors, while Progressive depended on independent agents for a long period of time. Geeko managed to collect more data than them. So I think they also played on data and pricing while Progressive moved to innovate more and retain clients.
Okay. So that brings us to the next phase. Up till 1990, this is how they were differentiating themselves on. Right. After 1990, only playing on pricing was not enough. And that's when the innovations started. A series of innovations were brought in. Can you name some of the innovations?
I think the first one and the major one, if we read the case, is their autograph underwriting system. So it made sure that a GPS-enabled tool was attached to all the vehicles of the policyholders, which will obviously give them the basic data regarding the car's make, material, and the basic things which the conventional insurers were taking into account while pricing a particular risk. But as Hanumaditya also mentioned, that only collection of data was not something that Progressive did. They also knew how to accurately read the data.
Of course, when you bring data into the pictures, you get a lot of positives but also a lot of drawbacks.
Yes, Simran. Abhishek, I'll come to you next.
Another negative that I would like to mention is the point that where we started from is data. So they are using this to collect data as well. But at some point it does interfere with the data privacy.
Okay, so data privacy. Yes, Abhishek, what is your point?
I was also about to say the same thing that Simran has quoted. The data privacy is a major issue. Like, how can I allow someone to know my location, like where I am going?
Okay.
So why not introduce a turn-off, turn-on feature for this policy?
Okay.
That customer will have the access of a chatbot in their WhatsApp, and they can directly connect it with the team in the insurance company and intimate them about, like, I don't want this policy to be adopted from this date to this date, and further in an immediate intimation, the policy can be reintroduced and this can be continued.
Okay.
This helps in costing.
Right.
The premium is reduced drastically, and this can be a major portion for the attraction of new customer and new market tapping.
Okay, I get you. Lovely. Thank you so much. So let's wind up the case. I would like to tell that postscript. I mean, the case is up to 2000, but post 2000, if you go and study more about what Progressive did, they actually came up with a concept of turn off and turn on, which means they gave control of data to policyholder, and that took care to some extent the privacy concerns of the policyholders. So now I'll come back to you. I want you to have your concluding thoughts on this case study. How did it help? Did it help you?
Yes, ma'am, it certainly did. And the case study, as all of us have gone through it, it ends on a very interesting question, that was it really in Progressive's interest to market policies like this, for which consumers would pay on an average 25% less as compared to what they would have paid in case of conventional policies. So I think the case study and what Progressive did actually answers this in a very beautiful way. They have mentioned that because of all the innovations that Progressive brought on the table, they made sure that all the non-standard risks were converted into standard risks over a period of time. So it is commendable to see that a company studies their policyholders' behavior in such a deep manner that they understand that what incentives or what perks should be given to the policyholders that will ultimately help them in changing their behavior. It will not just benefit them, but also when these risks are converted into good risks for the company, it will ultimately help them.
So we have gone through a number of innovations, and I can see that all of you have got some interesting ideas based on this, and you as future managers, you are going to take it further. My advice, or my request rather, as a policyholder myself is, can I expect as a policyholder an era when customer will come to an insurance company and say, this is my premium, now you design a policy for me. Price is mine, cover is yours. Can that era begin in India? So I hope these future managers will bring that era very soon in India. Thank you very much for this interactive session. Thank you. See you.